Get ahead of what's next with LawPay. While you roll up your sleeves for the next case, LawPay keeps you buttoned down with billing and payments. Secure your payment process, speed up collections, and ensure IOLTA compliance, all while freeing your time and resources to focus on what really matters, your clients. Whatever comes next, LawPay's trusted solution can help you ensure unparalleled productivity, profitability, and client satisfaction. DC Bar members sign up for LawPay today and receive a special offer. Let the 2024 Legal Buyer's Guide help you prepare for what's next in the legal industry. Explore the transformative power of AI and 8 essential technologies you can leverage to empower your team, enhance client interactions, and drive profit. Highlighting key features and providing expert insight, My Case offers a comprehensive roadmap to the best SaaS options. But this guide goes beyond simply shopping for software. It's your blueprint for success. Learn what to consider before taking the leap in order to unlock the full potential of legal technology. Download your copy today.
Hello, everyone. This is Kirk Schroder, and this is another edition of Brief Encounters, the Entertainment Law edition. And I'm very excited today about our topic and our guest. Our program today is a conversation with a fine art financier. And in particular, we're just excited to have Rebecca Fine with us, and she's coming to us from New York. Rebecca is the CEO and a founding member of Athena Art Finance. She began it as general counsel in 2015, and then she rose to the role of managing director in 2021. And then recently, congratulations, was appointed CEO. And her focus is on global and product expansion of this really unique and independent specialty art finance company. She has more than 25 years of experience at the intersection of art, law, and finance. And prior to being at Athena, Rebecca was a leading art lawyer, providing legal and business advice to world-renowned art collectors, galleries, dealers, museum clients, in all sorts of cases involving title, authenticity, attribution, and restitution claims. She's also been a civil litigator with some top New York law firms. She comes to us educated from Columbia University, having her bachelor's and her law degree there. And she is a third generation of women in the art world. Her great aunt, Rose Freed, was the first female gallery owner in New York City. And her mother is a sculptor, and her sister and brother are all painters and filmmakers. And my cousin is a sculptress up in New York City as well. So there's so much here that's just so neat about your background. Welcome to our podcast. Thank you for doing this today. I know the audience is going to be very interested in everything you have to say. It's a great topic. So you studied art history at college, and you were planning to get a PhD in art history. So tell me why you went to law school.
Great question. Thank you so much for having me on the podcast. I'm really delighted to be here and to meet your audience. Yeah, I was planning to get a PhD. I took the GRE and the LSAT back to back, and I applied to law school knowing really nothing about the law, except that it was a 3-year graduate program. And I decided that I would try it. I was always interested in art and the market and the hard work of creating art. But the only courses being offered at Columbia Law School at the time were taught by Ruth Bader Ginsburg's daughter, Jane Ginsburg, who still incidentally teaches courses at Columbia Law School on intellectual property and a comparative law course on artist moral rights under French law, droit moral. I worked at law school at the International Foundation for Art Research, which is now the Art Loss Register. But the only jobs in the art world for lawyers at the time were at museums and auction houses. And I was really interested in advocacy and trial work. So I gravitated to litigation, and I worked on sort of antitrust and securities litigation at Big Law. But it was really when I was finally at a boutique law firm, Schindler, Cohen and Hochman, that I was able to develop an art law practice and kind of wind my way back to the art world. And incidentally, Schindler, Cohen and Hochman has a great art law podcast that is aptly named the Art Law Podcast for people who are interested. And it was at that firm that I really focused on both transactional and contentious matters, and focused on the art-specific risks associated with lending against art as an asset class.
Wow. Well, what an amazing background. It's so neat to deal in the law and business in an area that you're passionate about. So I was looking at Athena, and it acts basically lends on high-value fine art. Can you describe what that means?
Sure. So As a general matter, we face the art market at the very sort of high end of the market. So most of our loans start at about $2 million against $4 million of value. We lend at a conservative valuation called marketable cash, which is essentially equivalent to net realizable proceeds. And so generally speaking, we lend to high net worth individuals, trusts, collectors, dealers.
So let me help break that down. So art at a minimum at 2 million to 4 million, is that the range?
A collection.
And then how is that appraised? Do you all appraise it or do you have an independent appraiser?
In every instance, we use independent third-party appraisers with expertise in the genre, so that we have really reliable valuation metrics. And when we talk to the independent appraisers, we ask them to use a methodology that is consistent with evaluation for loan collateral purposes, which is not the same thing as telling someone what their art is worth or even fair market value. And those tend to be the most fraught conversations with our clients.
You had a term net market. Could you repeat that term and tell us what that means?
For marketable cash value is essentially the equivalent of net realizable proceeds, or essentially the amount of money that we as the lender would receive in the event, God forbid, that we had to sell the art, net of all commissions and fees.
Okay, got it. If you had to sell it in another market and whatever you netted out of that. Okay, so tell us more a little bit about the business model of Athena.
Yeah, let me also explain that we generally lend against sculptures and paintings, where those artists have sort of liquid markets and long records of transactions, particularly in the public markets through the auction markets. And generally, we lend against a collection of artwork, not a single artwork, although we are working on a product that would enable us to make a loan against a single artwork.
Real quick before you get into the model, how is the art market doing?
No, the art market remains strong. Sales are expected to be a little bit soft in the spring, and we would anticipate that with the upcoming elections in November, the US elections that is, there's likely to be some retraction from sellers at the very high end of the market, sort of the trophy pieces, just because with the election term and global kind of instability, people tend to be less willing to take a chance with the public markets. But the private sales are very robust, and we expect that 2024 is going to be a strong year for the art market again.
Okay. So tell us a little bit about your company's model. If I have a significant piece of art that qualifies with the appraisal and you have the market value that you'd want to lend in it, how does that work?
Yeah, so very high level. Auction houses are in the auction business. Private banks are in the banking business. Art advisory firms are in the art advising business. And we, in contrast, are a dedicated independent lending business. And we founded to provide financing for people who really want to keep and enjoy their art collections. So we're entirely agnostic as to where our clients keep their non-art assets and where they buy and sell their art. We make non-recourse loans, so there are no margin calls, there's no pressure to sell or consign, and our clients retain full control over their entire financial portfolio, and they're free to explore a sale with whomever they choose. But we're also really discreet. So there are lots of clients who prefer that the auction houses not actually know where they have their collections or what they have in their collections, because they don't want to be pressured to sell. And for clients who really want their art assets to remain entirely separate from the rest of their financial portfolio, we are really a preferred financing partner.
I was interested about, the private nature of these transactions, yet if you're going to take a lien, I assume you're going to record it, a UCC lien somewhere in New York, that it'll be a public record, right?
Absolutely, that's true to an extent, but there is actually no international global registry for title or ownership of art. So with a UCC filing, you need to know where the borrower is resident in order to be able to run a search in the first instance. And for foreign entities, of course, you register your lien in the District of Columbia.
Yeah, and we'll talk about that in just a moment with international transactions. Let's get back on the model. I don't want to get too much in the weeds about liens. So I've come to you. You like the art. I'm going to get a loan from Athena, and everything seems to work out. What more do I need to know about that process?
So we're a true asset-based lender, which means that we have recourse only to the asset that's pledged as loan collateral. And once we have determined that we like the art, that it's eligible based on our criteria, we begin the process of underwriting the artwork in a very serious way. We really do focus on understanding the provenance of the artwork. We need to thoroughly understand the chain of title. We require proof of payment. Invoices and possession are insufficient indicia of 100% ownership. So we really need to be able to trace the ownership of the art. We conduct searches in the art loss register. I don't know if you've heard of that, but there we're able to at least determine whether or not an artwork has been registered as lost or stolen. A lot of fine art lenders also register their liens there, but one of the topics we can talk about later is the fact that there is no sort of global art registry. And on the borrower side, we also do KYC and AML research, of course, to understand who our counterparty is, to understand their collecting history. But broadly speaking, we're trying to understand the borrower's ability to service the loan and their principal repayment plan.
So if I'm negotiating with you a loan, what will be the typical terms? Will you give me a 2-year term, a 5-year term, an interest rate? What are some of the things that are kind of negotiated with you in that regard?
So the commercial terms are really bespoke. We want to understand the exigencies of the borrower's circumstances and to line up our terms as much as possible with their circumstances. Generally speaking, these are interest-only term loans, generally 2 to 3-year loans. In some instances, we do delayed draw term loans as well. But as a practical matter, these are term loans that are drawn down at the closing. And the commercial terms that are generally negotiated are around the kind of loan to value ratio, the margin, various covenants that we require. And the products really are tailored to our assessment of the credit risk. And largely this depends on the relative liquidity of the underlying collateral. I guess I should mention that this is generally the case. We lend against a number of artworks, not a single artwork.
Got it. And so in negotiation, let's assume I have good to excellent credit. What's the general market rate, a range? Do you do like a prime plus a certain interest rate, or is it a premium because of the nature of the collateral and the loan, or how are interest rates negotiated with you?
They are variable rates floating over SOFR.
Oh, okay, so they float. Okay, got it.
Generally speaking, there's an origination fee, but I don't want to get into too many of the specifics.
Sure. Just to give any of our lawyers and others just some idea of that.
What I will say, Mr. Kirk, is that our rates are very competitive with the auction houses. Sotheby's Financial Services is probably our closest competitor. Again, they have a very different business model. They're essentially looking to lock up consignments, so they're much closer to sort of an advance against a future consignment. But our rates are very comparable to Sotheby's rates. The private banks that do lend to clients really do so as an accommodation for their kind of important clients, but it's essentially balance sheet lending. And they're not as concerned or focused on the art because in the event of a default, they would be able to liquidate the client's equities portfolio, their mortgages, et cetera. Their rates are lower than ours, but oftentimes clients decide either that they want the privacy of being able to have an independent financing source, or they may not be eligible. In this market, there are increasingly fewer banks that are willing to do really true sort of asset-based lending. And we're a pure play ABL lender. So, we're very focused on the collateral and then sort of all the art-specific binary risks around things like title and ownership, authenticity and attribution.
Got it. You mentioned restrictions. Tell me a little bit about if I've made a loan with Athena, what kind of restrictions will I have on the use of the art that has been tendered as collateral?
I love this question because it really speaks directly to our loan servicing, which involves a lot of collaboration with our clients. So we basically help our borrowers with their collection management. In the US, we can accommodate borrowers' requests to maintain possession of their art under appropriate circumstances. And because exhibiting their artworks at important museums is important and enhances the value of our clients' artworks, we also allow the works to be exhibited or consigned for sale around the globe. So there are restrictions. We want to have a certain amount of lender possession, but ultimately our interests are aligned with our clients. So if we consider there's a risk allowing an artwork to travel to a jurisdiction, for example, without strong legal protections for us as a lender, it's not in the best interest of the client either. And if the requesting gallery has insufficient security safeguards in place, or the gallery itself is at risk of bankruptcy, we're sharing that information with our clients and they generally come to their own conclusions. But we really do aim to accommodate as much as possible our clients' requests to sort of maintain and enjoy the use of their collections.
And how's that different than others in the marketplace? Does it sound like that's a bit of a competitive advantage for you? If I'm negotiating these restrictions, is that pretty general everywhere, or are you all pretty unique in how you market that with your clients?
No, that's pretty unique. I mean, there are certain banks that do not allow any borrower possession whatsoever. Most US banks that do art lending do not allow collateral to travel outside of the US at all. And in fact, most of the banks that do lending against art do not lend outside of the US at all. And generally speaking, all of the lenders will have, certain restrictions. But I think that we are the best option for a client who is a true collector, who really wants to be able to leverage their artwork and without tying up any of their other assets. And they can both enjoy their art and leverage at the same time.
Okay, that's good to know. So our audience is going to have a different experience, I guess, with secured lending. Can you talk a little bit about perfecting the lien in the art? And, we talked a little bit internationally. I'd like to expand on that. But just in general, what is the process of perfecting a lien on an art loan?
Yeah, again, it depends on the jurisdiction where the borrower is resident. If we filed UCC ones in the US, and then we send the art, or the art is situated outside of the US, we have local law security agreements. Again, DC is an important jurisdiction because it's the place we register any foreign borrower that isn't resident in a US state. But in most jurisdictions, lender possession is a requirement for perfection. So we can't allow borrower possession outside the US unless there's a legal framework to do so. So, for example, in the UK, you can make a loan to a corporate entity and not take possession of the collateral. And we recently closed our first loan in Spain with partial borrower possession. But as a lender, it's really important you understand the regulatory framework of the jurisdictions where you lend, because, for example, some states require a lender's license to be able to make a loan. In California, for example, you need to have a lender's license, and we are one of the only art lenders with a license in California. And then some countries have banking monopolies. So a company like Athena that is a non-bank lender would need a license essentially to operate in those jurisdictions.
Two quick follow-up questions just for our audience. Tell us a little bit about securing the international loan. Maybe some of our audience doesn't understand about filing in the District of Columbia, a UCC, against an international piece of collateral.
So what's relevant is really the residence of the borrower, not the collateral. If the collateral is outside the US, we need to have local law security agreements that govern the treatment of that collateral, because we
So there's
lend.
a security agreement along with the lien.
Exactly. So you have a loan and a security agreement. Sometimes it's a loan and security agreement that's combined. But often if the art is located, or some of the art is located outside of the US, you need to have a separate security agreement. And that is important because as a lender, you want to be able to operate without the restrictions of any judicial intervention in the event of default. So when we lend in sort of jurisdictions where we're comfortable, or creditor-friendly jurisdictions, those are places where the lender, upon the event of a default, is free to exercise its rights and remedies without need for judicial intervention. You don't have to get permission from the court in that foreign jurisdiction in order to be able to, for example, remove the art and export it for sale outside of that country, for example.
Okay. And then I remember in early representing artists with galleries, some states have unique laws to the arts, such as the idea that a gallery, money collected from a gallery is a trust, so to speak, and the gallery can't use that money collected from an artist. I think like Massachusetts, there are different states that have that. Are there unique art lending laws or anything unique about the different states when you're lending, or any states that you have to do a little extra due diligence or take a few extra steps?
Absolutely. I mean, it's complicated and hard to generalize, but if you take a bigger picture, even on a countrywide level, you have to understand the cultural property laws of that country to know if there are any restrictions on moving the work into or out of the country. Certain countries have the right to seize artworks that it considers important to their cultural patrimony. And this could seriously interfere with a lender's ability to enforce or sell the artwork in the event of default. So that's something we look at always when we're considering making a loan where the artwork is outside of the US. You have to understand the matrimonial regimes wherever you're lending. When you're lending to individuals, you have to understand the regulatory framework, the tax regime. If you need to export the artwork in the event of default, you need to know that you have all the necessary documentations to get it out of the country. When something's imported or exported, you have to know if it was imported temporarily for exhibition or permanently for sale, for example. You think about whether there are intellectual property implications, any kind of gaps in the provenance that would give rise to concerns about title during sort of wartime transfers. That's something we're focused on. There are lots of considerations. I mean, if you're representing clients in these transactions, you have to have some expertise on insurance coverage. We look very closely at the insurance policies and the exclusions and coverages because, we rely on the borrower's fine art insurance policy and have to evaluate it for adequacy.
And that was my next question. I do a lot of film financing, and there are like maybe 4 or 5 companies that really will put a bond up on a film with the right conditions. Tell me about the art insurance world. Are there only one or two players in that? How does that market work?
No, interesting question. I mean, there are a number of really terrific insurers, but the sort of fine art and specie insurance world is pretty niche. So the Lloyd's market has a lot of expertise. There are, 3 or 4 big players. From time to time, I mean, what the lenders want is a fine art insurance policy. They call it wall to wall or nail to nail. And, we look at the rating of the insurance company to understand, the history of claims and payments made, for example. But there's a handful, 4 or 5 that we consider to be adequate for our purposes. It's interesting. Insurance is tricky because oftentimes art is insured by a client at a location where the borrower is not aware that there are like aggregation limits. If you have art, for example, at a fine art storage facility like a Freeport, you have to really be very aware of whether or not you have coverage at every location where your art is held. And this ends up often becoming an issue. And it's often, unfortunately, incumbent on us to inform the borrowers that there are gaps in coverage. And we share that information with the client. And in many instances, we really serve an important purpose of helping them with their collections management because our interests are so aligned that as the loan is underwritten, they really do develop a framework that facilitates the future sale of the work. And a lot of people speak about the fact that having the loan from Athena, like the imprimatur of having received a loan from Athena, really does enhance the future saleability of the work because people understand that it's such a thorough vetting process.
It's actually a credit to the valuation of the process and everything. In our time we have left, I just have a couple of quick questions. What kind of legal issues are art lenders dealing with in today's market?
There are virtually no aspects of lending that don't have legal implications. That's the short answer. So you do have to sort of develop some subject matter expertise across a variety of disciplines. And we sort of touched on those earlier. So you need to understand something about the jurisdiction where you're operating. I think we covered sort of the fact that it really depends a lot on the local laws and understanding a little bit about the way that various countries treat their cultural heritage. There are a number of written materials that could be of interest, some art law treatises that I think would be useful for people who are representing clients in connection with art loans. I really started my career representing borrowers. I was negotiating financing agreements on their behalf before I became essentially a secured lending lawyer and representing the lender. And it's interesting and useful to have those perspectives. But anybody who has sort of a secured lending or ABL experience will know what questions to sort of ask as they begin to discuss the loan agreements with the lenders. And I'm happy to recommend some publications if that's useful.
And we can put those in the course description. I know that'll be very helpful. Just in our closing minutes, two other things. So, what is the typical profile of a borrower that comes to you? I mean, any other things that if we have a lawyer in our audience that might want to recommend this as a possibility, what is the profile you're looking for?
Sure. So we work with collectors of all stripes. One of the areas where this is coming up a lot now, given sort of the great generation wealth transfer, are trustees, for example, who are managing trusts with art that are otherwise sort of, it's an illiquid trust corpus. And we have been working a lot with trustees to provide finance against the art where, for example, some of the heirs are not as attached to the collection that their parents spent decades building, or they're looking for liquidity because they want to diversify their portfolio. And there we provide lending to the trust to facilitate payments or distributions to beneficiaries, for example. And we work a lot with matrimonial lawyers in divorces where the art can't literally be split in half, but it will facilitate a settlement in many instances where there's consent, obviously spousal consent. So we work with matrimonial lawyers a lot, with trustees I mentioned. We work with dealers in the space. Art gallerists tend to have art that they own. Of course, we don't lend against artwork that has been consigned to them for sale, suffice it to say, but most of the big gallerists do have collections that they could ostensibly pledge as loan collateral, and then they take the loan proceeds and they're able to fund operations. It's increasingly expensive for galleries to fund their art fairs and participations in art fairs around the world. So that's an increasingly important demographic for us. And then we're working with a number of art investors who have, been building collections and had a lot more access to, really, we're using all equity to buy art, which is not a very efficient use of capital. And sort of the smart money is leveraging art now to kind of preserve its value in the future. And a lot of the folks in PE and hedge funds are getting capital calls now, and they're looking for ways to access equity that they essentially have trapped on their walls. So we're seeing an increase in inquiries from that demographic because it's really a form of equity recapitalization where they're monetizing the art through debt financing to solve for a liquidity need. And we're seeing more of that now.
So there are a lot of potential clients out there for lawyers that may need this that you might not normally think about.
Absolutely.
Yeah, this is such a fascinating topic. I'm just going to ask, is there anything else that you want to add or that we haven't covered that you think our audience might benefit from?
Yeah, I'd be remiss if I didn't mention the fact that our parent company, Yield Street, is a private market alternative investment platform. And the art loans that Athena originates and services are essentially offered in sort of private securitizations where we bundle the loans, and through notes that synthetically link to the underlying borrower's repayment of principal and interest, the investors note that yields typically 10% annually. And it's a hugely popular investment product, in part because it provides people with passive income linked to these art loans that are obviously conservatively underwritten. And there was so much sort of demand for that product that we've done 8 art debt funds since April of 2019.
So if any of our audience has people that want to invest in art lending, they would go to Yield Street, I guess, and look at those potential offerings.
Yeah, we call them sort of the diversified art debt offerings. And the initial investment or the investment minimums are as low as $10,000. So people have been investing in art finance through, private equity firms and other institutional players for a long time. But we are the only platform that basically provides access to the retail market for exposure to art as an asset class through these debt products. One other thing is that the art debt funds are IRA eligible. So this has been a particularly interesting product for our investor base. And at the moment, we can only take investment from US investors, but it is a super interesting way for people to diversify their portfolio, particularly in the circumstances that we've all witnessed over the last couple of years, where it's clear that the 60-40 model is sort of dead and everybody's looking for yield and looking for opportunities to invest in private market alternatives. And art is one of the least correlated asset classes, and one that I think continues to be really strong and to perform really well, even in the current circumstances. And
I got to ask, just jump in real quick before we sign up. So, what's the profile of an investor? Do they have to be a sophisticated investor under security laws, or can anyone, if they've got $10,000 or $20,000, get into that market?
It's an excellent question. They have to be an accredited investor.
Accredited investor, which has a certain definition to it under security laws.
Exactly. So for accredited investors, they can, with an investment as low as $10,000, get access to a portfolio of art-backed loans that have been underwritten by Athena. And I should also mention that we've underwritten about $750 million of debt to date. And also, I'm super proud of our finance team. We're an all-female, all-women, and we've been working together, most of us, since 2015. And really excited to be able to do this work and feel super privileged to be doing something I love as much as I love this. One more thing I wanted to add. For those who are representing potentially borrowers, it's important to know that the loans are totally anonymized. Nobody knows who the borrowers are, what the underlying collateral is. All we explain is if there's a sort of a concentration in one particular artist within a loan, we disclose that there's 15% concentration in a particular artist. But there is no way for the investors to be able to identify the borrowers. It's very important to our Athena clients that they understand that their information is not being shared with investors. So I just want to make that point.
That's important. You're investing in the debt, not necessarily any rights or interest in the art itself, or identifying or anything that would compromise the borrower that's putting up that debt as the basis of the investment. We're just about out of time. We could just have hours of conversation and probably a CLE program on it. But if anyone in our audience is interested in the art lending world, either as a borrower or actually getting into actually investing in art-related debt, it sounds like Athena Art Finance would be a great place in New York to check out. And there'll be some more resources we can post in our course description. And I just want to thank Rebecca Fine, who is the CEO of Athena Art Finance, for just taking the time to be with us on the podcast. This is just a great topic, and I think will be useful for our audience. So thank you for joining us. I'm going to give you the last word.
No, this is my pleasure. I'm really delighted to be able to participate. I hope that this is of interest. And I published a couple of articles for Observer magazine on the art debt product in particular. So I'm happy to refer the audience to those articles as well. But again, it's been my pleasure, and thanks for making time to speak with me.
Absolutely. All right, everyone. So this has been another edition of Brief Encounters, the Entertainment Law Edition. This is Kirk Schroder signing off and thanking DC Bar again for making this podcast possible. Have a great day.
This episode of Brief Encounters was brought to you in part by our sponsors LawPay and MyCase. Find out how these solutions can work for you by visiting lawpay.com and mycase.com. For more information, check out the description of this episode.